Hey guys, good afternoon. This is Working Saturday afternoon, June 30th. Uh, Coming to you with a Bitcoin update. Hope you guys are having a great weekend. I'm just getting back from vacation myself, and I've been paying attention to Bitcoin via cell phone. I promised I wouldn't trade while on vacation, and my family has held me to that. But we are now officially home, and even though I've missed out on some good movement here, I'm going to be digging back in here. Um, so we've had a lot going on in the last few days. Looking at the weekly chart, I've been talking about. If you guys have been following me on Steemit, you know that I've been looking at this massive descending resistance line for quite some time now. If I get a little repetitive, guys, it's just because anybody that's new listening to my videos, I want to make sure they understand where I'm coming from. So I hope you don't mind. I'll try to keep it quick. But this massive descending resistance line, as I've been saying, guys, is no joke. It's been tested many, many times since the December high of 20,000. Tested one, two, three, four, five, now six times, and on the sixth time, it's finally broken. What I would like to see, what I'm looking for, guys, and while this is extremely exciting, I do not, and this is without question, this is a change, a bullish change to a bearish trend. That does not mean we're in an uptrend now. I'm not saying that we're now in a bullish uptrend and enter all your long positions and the bulls are back in town. That's not what I'm saying. What I'm saying is this massive bearish trend line needed to be broken, and as of right now, it has been. As I'll show you in a minute, at least on the daily. On the weekly, I still would like to see. We've got 2 more days left in the weekend. Well, today and tomorrow, I should say. I would like to see the weekly candle, this weekly candle, close above this descending resistance line, and the new weekly candle open above it. If we can get the new weekly candle opening above it here in a couple days, that's going to be extremely bullish. That's going to be bullish. Shouldn't say extremely, but that is going to be bullish. This support line is still holding the 6,000 to 5,800 support. We had a little bit of an attempted break. We have had no decisive break below, just only wicks. It's all we've had so far. If this support does break, and again, not to be repetitive, guys, but just for the people new that are listening, we've got a massive ascending support. If the 5,800 support breaks, we're still keeping an eye on a massive ascending support line that's been going on since since the beginning of 2017. If this 5,800 support decisively breaks, I believe Bitcoin is going to go down to this massive ascending support line, and that's what we're going to be keeping an eye on next. If Bitcoin does officially close on the weekly chart above this descending resistance line, the next resistance line we're going to be looking at is this one right here, this second descending resistance line. And as you can see, guys, I expect major movement here, at least if not in the short term, definitely in the longer term. By longer term, I mean by probably the end of August, when Bitcoin reaches the apex of this support and resistance. Usually that means we're going to get a massive break in one direction or the other. So these are things we're going to be keeping an eye on. Zooming into the daily chart, let's see here. All right, zooming into the daily chart, we can see obviously we have decisively broken above on the daily, broken above this descending resistance line. We've had it open, and I'm hoping it's going to close. I think it is going to close today. Assuming it does, that is going to be a decisive break above this descending resistance line on the daily. It's already done that on the 4-hour chart, so it has been decisive, but if we can do it on the daily, it's going to be even more, much more bearish and even much more, or excuse me, bullish. Sorry, guys, bullish, going to be much more bullish. And if we can do it on the weekly, it's going to even be more bullish. Let me get a little better look here. Let me zoom in on the 4-hour chart here. Looking at the 4-hour chart, I told you guys before that if Bitcoin broke down out of this wedge here, I believe this was my last update, I said if Bitcoin breaks down, which it did, it's going to get support right here. There were a bunch of buy orders sitting right here. Excuse me, guys, sitting right in this area, which sure enough, textbook came down, wicked below it, but the buy orders here were enough to sustain the support. And we can see actually, it looks like it even created, yeah, another little wedge right here. Let's see, stand by 1 second, guys. Let me just make this look real pretty for you. Yeah, if I look at the wicks here, it looks like it created a nice little wedge right here. This is the first time I'm noticing this. Should have noticed that before. So yeah, we had a nice little wedge right here. If I draw out the wicks, and it exploded up. I showed you guys before this support right here, based on support in this area and it acting as resistance in this area. I expected to see some resistance if Bitcoin did in fact try to break above. I believe that is 6143 or thereabouts, 6141. And it didn't even acknowledge it. I mean, it did not even acknowledge this resistance. It just exploded right through it. We can see that it continued to explode through our massive resistance line here, descending resistance line here. And then, almost as if, again, textbook, it obeyed this resistance line, wicked down. So the body came down here and ended up closing below the resistance line on the 4-hour chart. And then, excuse me, on the next 4-hour chart, we had an open just above and then a close just above, which confirmed this at least short-term uptrend and confirmed to break above this resistance line. So no matter what Bitcoin does now, this resistance line has officially been broken, at least on the 4-hour chart, which is a decisive break in my book. I would expect from this point on, if Bitcoin does continue to retrace, I would expect this resistance line to now act as support. So yeah, I would expect this to now act as support. So this is good stuff. This is a good sign. Excuse me, guys. Let me clear my throat for 1 second. Okay, so this is a very bullish sign, as I was saying, guys. Things are looking good for now. Do I think that this is we've seen the bottom? To be honest, guys, and I'm always going to be honest with you, I'm a bullet heart. You guys know that if you've listened to me. I want to tell you that we've seen the bottom. I'm not convinced. Even with this break above, I'm not convinced that we have yet. I'm convinced we're getting closer and closer to it. I'm probably about, whereas last time we talked, I was about, maybe 30 to 35% that we were maybe entering a bullish market. I'm now maybe 45%. So I'm still leaning majority bear at this point, but I'm certainly getting to the point where it's almost 50-50. We could almost go either way here, guys. I've seen Bitcoin come up in this area so many times, and this ended up being a bull trap, which this may very well be right now. We know there's a lot of manipulation on the market right now. This may be a bull trap, only to have Bitcoin come back down and crash below the support zone in this right here. But as of right now, we're looking bullish. We're looking extremely bullish. So let's take what we can get for now. Coming over to the my larger count, as you guys know, I still believe we're in a WXY pattern. I believe Bitcoin, which if you don't know what a WXY pattern is, I'll repeat it again. It's just a pattern that connects two ABC corrective patterns with a, sorry about that, guys, two ABC corrective patterns with a failed wave denoted by X. So we're looking for the bottom of wave C. Have we seen the bottom? It's very possible we've seen the bottom of wave C, and now we're trending back up. Obviously, the next would be 5 impulse waves up after an ABC correction. So is that possible that we've seen the bottom? Absolutely. Is it also possible that this wave C could come a lot lower? Yes, that is also a possibility. This could just be a bull trap, and we may not have seen the bottom of wave C. One thing I want to point out, even if we have seen the bottom of wave C, even if this is the bottom, looking at the way Bitcoin has been reacting since this massive spike, it's almost been, if you think of these as waves, we had a massive wave up, and then we crashed right back down. I believe this was just pure manipulation. I believe this was kind of a false bottom here. We had a bunch of manipulation to bring the market back up here for a second wave, trapping a lot of buyers in. I think a lot of big money got out at this point and transferred a lot of the, we call it a guppy rally, transferred a lot of money into a smaller players' hands. That's just what whales do, guys. Unfortunately, we can see it took a little bit longer for this to play out. And this third wave now, third rally we call it, this took even longer to play out. So this shows you weakening of the market, and then it came back over here to possibly create a bottom of wave C. What wouldn't surprise me at all, guys, if we're just following this, if we're continuing to follow this pattern where we get this little wave, a little bit of a longer stretched out weaker wave, and then a third longer stretched out weaker wave, it would make more sense to me that we may be entering another small temporary uptrend for a smaller. Here, I'll just draw this out for you guys. So you can see this was more bearish. It's getting smaller, creating a lower high. And then again, for this third wave, we created again another lower high coming back down. And what would make the most sense to me, if this is in fact going to be a temporary uptrend, is we do something like this, creating a lower high again. And coming in, and how would we denote this? How could we count this rather than calling this an ABC? Let me get rid of this here real quick. Rather than calling this an ABC, guys, we could just call this an A, B, C, D, E. And that looks, right now, guys, that looks more probable to me than the bottom of, wave C, or excuse me, this corrective. We may have seen a bottom of wave C, but that rather, I still think that we may be in a continued corrective phase in A, B, C, D, E pattern rather than just an uptrend. It is possible that we are uptrending. That's certainly a possibility, guys, but it's also very possible this is just an A, B, C, D, E. Only time will tell. I can't tell you what it's going to be. I'm just telling you things to look out for. How are we going to know? Well, if we can break above this descending resistance line that I just kind of pointed out here real quick, if we can break above this, that's going to get my attention. That's going to tell me that maybe we aren't in an ABCDE correction. If we can break above the top, the prior wave here, the prior little correction or uptrend followed by a correction, I believe this went up to right about 10,000, or actually it was around 9990, somewhere thereabouts. So right around 10,000. If we can break above 10,000, then that will convince me that we are certainly in an uptrend. Until we break above 10,000, until we get until we stop creating a series of lower highs with these bounces, I'm going to believe that we're still in a corrective phase. Once we break this trend, once we break above, this continuation of, we had a high here, a lower high here. I'm assuming this is going to create a lower high here. If it does not, and we break above 10,000, that's going to kind of, in my mind, that'll kind of break this pattern, and that'll confirm an uptrend. It'll at least confirm the continuation of creating lower highs of these little guppy rallies that we've been seeing. So that will be massively bearish, or excuse me, massively bullish. We're just going to have to keep an eye on it and see what happens, guys. Okay, looking at the 4-hour chart, I've got the 8, 55, and 21-day EMA up. We can see it again. I mean, this is just massively bullish. We can see the Bitcoin just skyrocketed right through the 8, 21, and 55-day EMA. Especially that 55-day EMA is very bullish on the 4-hour chart, breaking above that. We can see the 8-day EMA is now broken all the way above to the top. It's broken above the 55-day EMA as well. That's a bullish sign. What we're looking for, the setup that I like to see, the bullish setup that I like to see on a minimum of a 4-hour chart, and certainly on a daily chart, but on the minimum of a 4-hour chart, one thing that is oftentimes a sign of a trend change is if we can get the 8-day EMA stacked on top with the 21-day EMA in the middle and the 55-day EMA on the bottom. That's just a little trick of the trade, whatever, but that is definitely a sign that the bulls are starting to take control of the market. If we can in fact see this 8-day EMA continue to trend up, this 55-day EMA continue to trend down, and the 21-day EMA go right in the middle, and then they start to fan out. If we can get that, guys, yes, that is gonna. I'm gonna get a lot more interested in Bitcoin. A lot more interested in Bitcoin. That's going to be an extremely bullish sign. I'm switching over to the daily chart. Let's see here. on the daily chart, we can see that Bitcoin was the 8-day EMA was acting as resistance. It's now broken above that. The 21-day EMA is the next natural resistance. We can see it was rejected. Let me zoom this in so you guys can see that a little bit better. We can see it was rejected right there off the 21-day EMA. And went right back below. If we can see Bitcoin rally back up and break above this 21-day EMA, that's going to be an extremely bullish sign, guys. Extremely bullish sign. Another bullish, actually, I'm just noticing this now, guys. Sorry, I didn't really prep much for this. Another bullish sign that I'm looking at, we've got a nice, massive bullish engulfing candle right here. That just if you are familiar with your candle patterns, this is a bullish engulfing candle off of this bearish candle. That's a very bullish sign. That's oftentimes seen in a trend reversal. Now whether or not it's just short term, which I tend to think right now it is rather short term, but hopefully I'm wrong. I hope I'm wrong, guys. Eventually, one of these times we are going to have to see a trend reversal. It's going to happen. It's just a matter of have we seen the bottom yet? And I don't think we have, but as I said earlier, guys, it's possible. So let's wait and see what happens. Certainly on the daily chart, once we get this, once we get the 8-day EMA rising above the 55-day EMA, that's certainly going to get my attention. Yeah, we're just going to have to keep an eye on this, guys. All right, switching over to stand by 1 second, guys. Let me have to take care of something real quick. Okay, guys, sorry about that. All right, switching over to the MACD. Let's look at some indicators. We've got the 4-hour chart up. I think I pointed this out again. If you guys are new, you haven't seen this. For you guys that have been following me, I pointed this out before. Right at the end of, right at the beginning of May, buyers just disappeared. Looking at the 4-hour MACD, you can see. I mean, it's just right here. It's just a ghost town. I mean, there's just nothing there. That is rare. I've not seen that at all in Bitcoin. At least not in a very long time. I mean, it's just a ghost town of buyers in this area. And we can see that it created a resistance. Let me just get this dialed in here for you guys. We can see it created a resistance point right around, I don't know, 51 or so on the 4-hour MACD. The histogram had been unable to break above that since early May. There we go. Let me just get that dialed in. Yeah, dialed in there. Since early May, guys, it had been unable to break above that. It has now. Since we've talked in last time, the histogram has broken above, which is another bullish trend change. Again, that doesn't mean that we're now in an uptrend, but that does mean that that is a bullish trend change. There are many things that we've got to the bulls are going to have to, many resistance points the bulls are going to have to break through to get this market to reverse course. But this is one of them. I mean, this shows you that we're starting to get some life. And even if Bitcoin does drop back down, it shows you that there is still interest in this market. I mean, the market is not dead, guys. I believe, as I've said before, I believe once the SEC comes out with some clear guidelines, we're going to see some money pull into this market that is going to put us in a bull run that's going to dwarf 2017. And I truly believe that, guys. I believe it's just a matter of time. I believe there's big money sitting on the sidelines waiting for the SEC to come out with their guidelines, which you can't blame them, guys. You're talking about millions, possibly billions of dollars sitting on the sidelines, and they want to know what the rules are before they play the game, obviously. Once that happens, once we have clear rules, I mean, we're going to see a ton of new money, and that's exactly what we need is new money to enter this market, guys. We need new money to enter this market to reverse course here. And once we get that, I believe. Now, I don't know how long that's going to take. I would assume by the end of this year. I know there's a lot of pressure on the SEC to get those out there. Once that happens, though, guys, I believe that we're going to see a bull run that's going to dwarf 2017. So anyway, getting past this, the histogram has broken above this resistance line for the first time since early May. Very, very bullish sign. Looking at the trend line, both are trending up, showing no signs of reversal at this point. Let's switch over to the daily chart. Get rid of this. Okay, switching over to the daily chart. I showed you guys before, I believe in my last update, I said that the histogram was getting squeezed tighter and tighter and could not get squeezed any tighter. I said, it's going to have to break in one direction or another. And sure enough, at least temporarily, that's a break. We had a nice break from this continuous squeezing of the histogram. Coming back in here to the trend line and the MACD line down here, we can see that it's, they were almost overlapping each other, and we've now seen a nice break to the upside, and again, showing no signs of reversing course as of yet. Doesn't mean this isn't a bull trap, guys. It's still very possible it is a bull trap. I'm not telling you guys to go out and buy. Please don't do that. Please don't run out and spend all your money. If you want to start slowly laddering in, that's one thing. But I mean, guys, if this does go back and if this does drop down lower, you're going to want to have fiat on the side for obvious reasons, not just so you don't lose money, but so you can take advantage of those lower prices. And they say, well, Workin, what about if it goes higher? Then I'm going to miss out. Well, yeah, you might miss out on a few percentage points, maybe even 10, maybe even 15%, hell, maybe even 20%, guys. But once this wave starts riding up, there is a ton of upside to go. There's a ton of runway left. And it's better to ride the wave up than try to swim upstream, than try to time the bottom of the market. Better to just ride the wave up. It's much more conservative, especially if you don't have a lot of money to play with. So the more conservative route, the best route to go, guys. I'm not telling, this is not financial advice, by the way. By any means, I'm not a financial advisor. This is not financial advice. But just telling you as some guy that doesn't want to see you lose money, and I truly don't, guys. That's why I do this. I don't do this for the money on Steemit, for the couple dollars I make on Steemit. Don't do that at all. I do this because, somebody, initially when I started trading, I had a lot of help, and it just, it allowed me to be very successful. I had a mentor that just, he was phenomenal. He was phenomenal. Showed me so many things. That was one of the biggest things. Have fiat on the side, and do not try to swim upstream. Go with the stream. Go with the flow. Find out what direction it's going, and then swim with the stream. And that's the advice I'd pass along to you guys. Do not try to time the bottom of this market. Once it does start uptrending, there's going to be plenty of opportunity in this market. So anyway, let me get off that. Let me get off my high horse. Let's look at the RSI, looking at the daily RSI chart we've been talking about. And in this massive descending resistance line, we did have a bull trap right here where it broke out, immediately went right back in. Excuse me, guys. Immediately went right back in, and now we've had a decisive breakout on the daily chart here. We've had another decisive breakout. Very, very bullish. This is, once again, another bearish trend that has been broken. Doesn't mean that we're in an uptrend. Doesn't mean that the bulls are back in town by any means, no. But it does mean that we've seen yet another bearish trend broken. And that is, in fact, a good sign. That is a very good sign. And we can see what looks like what may also be the start of a nice little support line, nice little ascending support line. Not going to call it that now, but it looks like, maybe Bitcoin is starting to, on the daily RSI, starting to establish an ascending support line. We'll have to wait and see if that actually holds true. But as of now, this is a very bullish indication. Stand by 1 second, guys. Okay, I'm back. The last thing I'll show you on the histogram, or excuse me, on the MACD and on the RSI, I think we pointed this out last time. There has been some bullish divergence. There was some bullish divergence, has been for quite a while on the histogram. We can see it's kind of been trending up here as the price has been trending down. Also on the RSI, let me just make this a little bigger so you guys can see the RSI a little bit better, because it's a little harder to see that one. Also on the daily RSI, just more recently, and this was I believe I said this in my last update day before yesterday. I believe it was day before yesterday. We just now are starting to see the RSI, daily RSI jibe with the MACD, and we saw some bullish divergence where it created a higher low on the downtrend, and while the price was still trending down, we created a higher low, in other words, an uptrend on the RSI. Bullish divergence, we had bullish divergence on both, which told me that it was just a matter of time before we saw a break to the upside. Now, again, how long is this going to last? I don't know, guys. Again, I'm still leaning a little bit more bear than bull. I still think that we have not seen the bottom yet. But one of these times we are, and one of these times the bottom is going to have to be in. So it is very possible that we have seen the bottom. It is very possible that we're in an uptrend. But possible does not mean probable. Even though I'm more 55% bear, 45% bull, I'm almost 50-50, whereas before I was more 30-70. Now I'm almost 50-50, still leaning a little bit more to the bearish side, guys. But with all the bearish trends changing and being broken, I'm starting to lean a little bit more bull. Okay, coming to my bearish count. Excuse me. Coming to my bearish count, guys. It hasn't changed. The only thing that has changed is is wave 2. And with this uptrend, wave 2 has gone a little bit higher than it was prior, but I'm still seeing us in 5 waves down. I've got the primary waves in blue, sub waves in purple here, guys. And the target for my 5th wave, which we are in primary 5th wave here, or in sub wave 3, starting on sub wave 3, I'm assuming. I'll zoom in here in a minute and show you guys. But primary target for primary wave 5 is going to be this descending resistance line. Why am I not using the Fibonacci? If I was to use Fibonacci and target a 1-to-1 for wave 5 coming off of wave 3, that would put us somewhere in the neighborhood of around 4,300 or so. I'm not doing that because, as I told you guys in the beginning, this massive ascending resistance line that goes all the way back to beginning of 2017, that I'm assuming is going to provide major support, which tells me that wave 5 is probably more than likely going to find its bottom somewhere around this ascending resistance line here. We'll just have to wait and see if that does hold true or not. If not, we're probably going down to around 4,400 or so. But yeah, I'm guessing that this ascending resistance line is going to, or excuse me, ascending support line is going to hold up, and we are going to see a rejection off of that support line if this bearish count is in fact valid. Zooming in so you guys can get a little better look. You can see that we had subwave 1, 2. We had a fairly deep retracement of subwave 2 here. I believe that went to, let's see here, guys, the subwave 2 retracement. Get that right on there. Yeah, so subwave 2, we had it. The body of the candles went basically right there to the 618, dropped just below the golden zone by a wick, well below the golden zone actually, but only by a wick, and then immediately came right back up. So the 618 was rejected hard off the 618, and now, excuse me, and now if this bearish count is valid, this would be the start of wave 3. Why am I targeting wave 3 where I am? Whoops. Why am I targeting wave 3 where I am? I'll show you here. Let me get this right on. Pulling our fib extension tool. You can see wave 3's target is, if I'm just targeting a 1-to-1, which, as I said before, guys, wave 3 is often the longest and the strongest of the waves, so 1-to-1 target is a very conservative target. More than likely, it's going to be somewhere lower than that. But for now, I'm just going to conservatively target a 1-to-1 ratio of 100% basically of wave 1. That's going to give me a target of around 54.40 or somewhere thereabouts. Wave 4 is going to more than likely retrace much more shallow than wave 2 did. According to Elliott wave theory, if wave 2 extends deep, wave 4 is going to extend shallow, and vice versa. Wave 2 extended deep, so wave 4 is probably going to be shallow, more than likely, and then we're going to come down for a wave 5 here. So that is still my primary account, guys. I'm starting to leave a little bit more bullish than I was before, but this is still my primary account for now. Again, with all the bearish indications starting to fall over like dominoes, you have to wonder. I mean, either this is massive price manipulation, which is very, 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 very possible, guys. This is very possible. This is massive price manipulation. Sorry about that. Frog in my throat. And if it is price manipulation, trying to trap you guys into long positions, calling this a bull trap, and this is going to come right back down. Or we are, in fact, switching, reversing course. The trend is changing, and we are, in fact, in an uptrend now, and time is going to tell. Time is going to tell. We'll just have to wait and see what happens. My bullish count, excuse me, guys. I have changed some things on my bullish count, so I'm going to need to explain this to you guys. One thing that you'll find that I don't do, which a lot of analysts did do in the past, they would, one day they'd say one thing, and the next day they would say something completely different and act like they didn't say what they said before, if that makes any sense at all. To put that in layman's terms. So I'm not going to do that to you guys. I'm always going to explain why I'm changing what I'm changing. My prior count had this as a wave 1. This had this as a wave 1, 2. That is still valid. I mean, you could still count it that way. But when I did that count, I was on vacation. I was rushing a little bit. That's not an excuse. Again, this is still a technical count. I could still count it that way. And if I did, this would be wave 3. This would be wave 4. I believe this is how I had it last time. And this coming down for a wave 5. That's still a technical count. Still a high, not high, but still a possibility. But based on price movement, there has been, since my last update, there is a higher probability, in my opinion, a higher probability count that makes a lot more sense. And I'm going to show you what that is. Okay, so if now this is wave 1, this is wave 2, how can I just change that willy-nilly? Well, yes, as long as you're following the rules of Elliott wave. The rules are hard, fast, and steady. As long as you're following those rules, there's a lot of subjective things that go into that. And I could count, as I said, I could count 5 waves in here to call this a wave 1 as I had before. I could also count 5 waves into this and call this a wave 1. I showed you guys, I believe, last time the 5 waves in here. It's just 1, 2, 3, 4, and 5. Or I can count this as 1, 2, 3, 4, and 5 to make this a wave 1. The ending result doesn't really matter, guys. That's why I wasn't too concerned about that before. But I don't want you guys to think I'm just changing things willy-nilly on here because I'm not. I'm not doing that at all. But based on the price movement of the last few days since my last update, I believe there's a better count, and let me show you why. So if this is now my wave 3, so there's got to be 5 waves within wave 3, which there is. 1, 2, 3, 4, 5 to end wave 3. We've got our A, B, C for wave 4, and now getting into wave 5. This is my old count. This is not where I believe wave 5 is now. I haven't changed it yet because, and disregard these waves over here. I'm going to bring these in a second. These are all pre-measured out, so I don't want to mess with them, so disregard them for now. But in my last count, I told you guys that, this looked like the bottom. If the bullish count is accurate, this was the bottom of wave 5, and now we're in the middle of 5 waves up. I've got the subwaves in pink, as I did before. Let me zoom in and show you the changes I'm going to make. Okay, here was my old count. We had this as wave 1, subwave 1, and before, in my last count, it went down to here. We had 2, and then the 3 to come up. If this can still be a valid count, guys, I told you that if this retraced by 99.9%, it still can be counted as a wave 2. Elliott wave theory says as long as it doesn't retrace below the start of wave 1 by 100%, so in other words, it can retrace by 99.999% and have this still be a valid 1, 2. So where is the bottom of wave 5? The bottom of wave 5, where is the bottom of wave 5 or the bottom or the start of wave 1? Both of those in and of the same. The start of wave 1 we can see right here is 57.55. So it cannot retrace below 57.55. We can see it went down to 57.80. Okay, so that's about 99.9% or thereabouts. So I could still count this as put this right exact, 1, there we go. This could still be a 1, 2, and coming up for a 3. Why am I no longer going to make this my primary count for my primary bullish count, I should say? Well, first of all, there's a better count, but this is still a valid count. So now let me just go over this real quick. So this could be a 1, 2, coming up for a wave 3. This is still targeting a 1-to-1 ratio of wave 1 for wave 3. It's probably going to be higher than that. If that is in fact the case, wave 4 cannot retrace into wave 1 territory by more than a wick. We can see it already has retraced by a wick, right here. So this is still a valid count. We can accept that. We can accept a wick. We can accept a retracement of wave 4 by only a wick into wave 1 territory, which as of now it is only a wick. And then we could bottom out and hopefully begin a wave 5. That for now, that is still a valid count. Now I know some are going to say, for you Elliott wave purists out there, some are going to say, well, guys, this is a very highly leveraged market, and that's true, it is. So why do I bring that up? Well, in a highly leveraged market, you can have it retraced by more than a wick into wave 1, as long as we're in a highly leveraged market. We certainly are. This is definitely a highly leveraged market. So even if this does retrace by more than a wick, some people would say this is still a valid count because, this is, again, a highly leveraged market. Guys, to me, given that this already retraced by about 99.9%, so I'm giving it some leeway there. Still is technical, but, it's not the prettiest thing. But, there you go. If this was to continue up into a normal-looking wave 3, to where I didn't have to start, taking in the exceptions to the rule down here, talking about trade retracing by more than a wick, and even if it does that, talking about by, well, it's a leveraged market. I'm still being technical, but at that point, once I start taking in all those liberties, once this starts looking as convoluted as it currently is, even though this is technical, even though this is still a valid count and is still a probability, I have to say, guys, is there a better way to count this? I mean, at this point, I'm pulling out all the stops to try to force this count. Is there a better way to count this? And the answer is yes. So let me get rid of this and this and show you guys why I'm doing what I'm doing. Okay, I believe that if the bullish count is accurate, this is the bottom of wave 5. Now I know what you guys are thinking. Okay, let me get this all technical, and let me zoom back out. I believe this is the bottom of wave 5, which would mean this is wave 1, and now we're getting into wave 2. How can I say that? I know what you're thinking. I know immediately what you're thinking. You're thinking, okay, how is that possible? Wave 5 has to have 5 subwaves within it, correct? I mean, for it to be a wave 5, we've got to have 5 subwaves within it. Absolutely. That's 100% true. Well, actually, let me even pull out further than that. Looking at this from a bigger picture, this is a very shortened wave 5, right? I mean, this is absolutely, I should have covered this before, guys. Sorry about that. This is a very shortened looking wave 5. It doesn't look relative to wave 1 and wave 3. To that, I would say, you're right. And so what? Oftentimes, Bitcoin does have a shortened wave 5. In fact, oftentimes, Bitcoin has a truncated wave 5. In this case, it's just shortened. So, yes, is this a shortened wave 5? Yes, it is. The question is, can I get 5 waves out of it? And the answer is yes. And again, I know what you're thinking. You're looking at this and you're saying, wait a minute, this is, we just pointed out, even though not by much, this is actually higher than this. So how can this be a wave 5? And you're not counting this as the bottom. I'm going to show you. Okay, zooming in. As I said before, there's got to be 5 waves to count this as a wave 5. We've got to have 5 subwaves within the primary wave 5. To get 5 subwaves, let me just get this wave C out of the way so you guys can see a little bit better. All right, to get 5 subwaves here, it's not hard to do. We've got wave 1, wave 2, wave 3, wave 4, and wave 5. And before you guys start freaking out on me and start making your point again as to why wave 3 is higher than wave 5, and how can that possibly be? Well, that can possibly be because this is just a truncated 5th subwave, a truncated 5th subwave within wave 5. And that is absolutely 100% technical. In fact, if you go back, that's happened many times with Bitcoin in the past. That is 100% a technical, a technical, hang on one second, guys. Sorry about that. Okay, sorry about that, guys. Had to get a drink of water there. That is 100, where was I? That is saying this truncated 5th wave, that is still technical. We've got a truncated 5th within a 5th. That is absolutely allowed, no question about it. And What makes the most sense here, guys? Does it make the most sense the prior count that I was showing you, trying to look up every exception in the book as to why this would be a 1, 2, 3? Or does it make more sense that this is now just a nice clean impulse wave up, and this we've got 5 clear waves within here with a truncated fifth? That makes a lot more sense to me. That is a much cleaner count in my opinion. And the cherry on top is, to me, this area right here, I already pointed out, this almost retraced 99.9% of this wave, or of wave 3. Wave 5 almost retraced 99.9% in this area. This is basically a double bottom. This looks to me, if I should say, if this is in fact a bullish uptrend that we are currently in, this looks like a double bottom to me, guys. I mean, and you're going to say, well, it's not exact. Yeah, show me one double bottom or double top that is 100% to the dollar exact. This is about as an exact double bottom as you can get. So yes, this is a double bottom. This makes sense. Absolutely makes sense if my bullish count is valid. That's a big if. But if it is, this absolutely makes sense as a truncated fifth wave. Get rid of this. And these are the subwaves in here showing you that that is in fact an absolutely valid count. And now let me bring in the prior waves that I drew so you can see what my targets are here. Okay, this is my primary wave, obviously denoted here in blue. And these are my subwaves. So we've got 1, 2, let me get this over here. There we go. More here. I'll have to outline this here in a second, guys. Okay, so this is my primary bullish count. Let me give you guys a good view of it. Well, actually, I'm gonna draw this out for you guys to have a better view. Let me start off with the closer in perspective so I can show you guys. This is my new bullish count, and this is absolutely 100% a much better count. Based on the price action, based on this double bottom, this makes much more sense than my prior. Even though my prior is still technical, it is still valid as of right now, this makes a lot more sense. So why am I drawing wave 2 where I am? Show you. If we are in fact in a bullish uptrend, I would expect wave 2 to probably bounce no lower than the 0.382 fib level. If that does happen, this would make a logical target for wave 2. Where's the target for wave 3? Well, target for wave 3 is I'm gonna target again a 1-to-1. Why am I targeting a 1-to-1? Well, I'm targeting a 1-to-1 because I'm a more conservative trader. More than likely, if we are in fact in an uptrend, it's going to go a lot higher than that. But pulling my extension, you can see that this should target exactly about a 1-to-1. Actually, it looks like it'd be a little bit higher. So if this is in fact the bottom of wave 2, wave 3 is going to be somewhere just about here, and I'm going to target just a little bit higher than the 1-to-1, but not by much at all, just because I'm assuming we're going to probably at least go into it there, or at least go above a 1-to-1. But somewhere thereabouts. This isn't, at this point, not an exact science. At this point, all we can do is look at probability and go, okay, if this is, we know where the top of wave 1 is, probability for wave 2, as I showed you, maybe the 0.382. If that is true, then the probability for wave 3 being a 1-to-1. If that is true, where is wave 4 going to drop? Wave 4 is probably going to drop, let's see. Whoops, sorry about that, guys. Pulled the wrong one. There we go. We just want the retracement this time. So looking for the bottom of wave 4. Wave 4 is going to retrace probably more than likely deeper than wave 1 did. As we explained earlier, if wave 2 goes shallow, wave 3 goes deep, and vice versa. I'm going to say wave 4 will probably go maybe the 0.5 fib level, and then that would bring us up into our 5th wave. If that is in fact the case, pulling our extension, we go right here, bring us up to an exact 1-to-1 target, and that is why I've got this target of wave 1 here at about 74.50 or thereabouts. Coincidentally, guys, 74.50 is where we're going to find some major resistance right over here in this area. So this is a logical target for wave 1, and these are why I'm targeting the subwaves where I am. I don't mean to bore you guys. If you don't want to see stuff like that, if you don't want me to go into detail like that and show you why I'm targeting, if you just want me to show you where the targets are next time on the next video, feel free to let me know that. I hate to bore you guys, and this is already going long enough. Okay, so zooming out. Actually, sorry guys, the 5th is going to be somewhere in this area. So zooming out, guys, this is going to be my bullish count. I'm already looking. We're already at about 45 minutes here. So I'm not going to bore you anymore with this. This is going to be my bullish count. As far as the target for wave 3, wave 4, and wave 5, you know, these are, I just got these targets the same way I got these subwaves targets, so I'm not going to bore you with that. That's about it for this this update, guys. I apologize. I did not mean for this to go 45 minutes. I'm going to sign off now. If you guys enjoyed this longer format, let me know that as well. I'm assuming you guys probably want this to be at 15 minutes or less. That's going to be my target going forward. But as I said, I've been away for a while, guys, so I was kind of figuring this out with you. And maybe hopefully this gives you a little bit better of an idea of the way I'm thinking. So going forward, you guys can, you know, maybe this helps you guys figure things out yourself. I don't know. But anyway, that's it for now, guys. Apologize for the longer video. If you did like this, please give me an upvote. If you didn't like it, let me know that in the comments as well, guys. You know, any feedback or criticism is more than welcome. I certainly appreciate your support. And until next time, this is Workin signing out. Take care, be safe out there, guys, and we'll talk to you soon.